I just figured out something, or I just remembered or redeveloped something that I had found or developed like a year ago now. But because obviously I lost or I didn't lose, but I stopped trading ICT because I wasn't able to open like a normal trading account, so I wasn't able to open like a futures or like a like commodities, currencies, indices account. So I was only limited to like penny stocks, which I wish I never traded. Now looking back, I can definitely see with like clear-minded head, I can definitely see that I definitely could have made money, but I was stuck in the fear and greed cycle, so I wasn't really able to like see that I was stuck in it. So I was really just like trading off of emotions. But so I was looking and I was seeing that uh so you have previous highs or previous or external range liquidity. So external range liquidity is external highs and lows. So a previous range, so they're of a previous range. So like let's say you're trading up and you're making higher highs and higher lows, right? And you valued or uh yeah, at the bottom you yeah, valued and then started going higher, right? So yeah, you valued and started going higher, right? Making higher highs and higher lows. Now, these higher highs, when these higher highs are broken, you're not looking for the retracement at that break. Rather, you're going to the previous range and looking at highs that created lower lows, and those are the ones where you want to see the break above that and then the retracement. Now, when you have the breaking of like let's say you have uh the external low that created that range, right? That created a previous range, and you have the external high that created a previous range. When those are broken, you would take, uh, or I'll just show you. So I don't think I can flip this. So like, look at it right here. You can see that okay, price came all the way down, breaking these lows. Look at it right here, and then started to trail all the way back up, right? And when it started to trail all the way back up, when it broke this low, look at it right here, right? You would draw from the previous high all the way down to the previous, all the way down to the current low. And that's because this is where the liquidity started. This is where the liquidity ended. You can see optimal trading entry, price hits optimal trading entry and starts to trade down. Now, why wouldn't you take it off of here? You wouldn't take it off of here because it broke external range liquidity. So when you have it breaking a significant area of external range liquidity, or even just uh external range liquidity that you know has like a lot of liquidity, you would take it off the previous low or the previous high. So if you're trading up and you break above a previous lower high that created that then created a lower low because you're looking at the previous range or external range liquidity or external highs and lows, you would then take it from the previous low, not the current low that created now the higher high and break above that, but the previous one because that's where the structure was formed. Uh, and you would take it off of there because there's going to be an extremity that's going to happen, which because there's a lot of liquidity. Look at it right there. So yeah, it's pretty much just uh, you know developing, just looking at the charts, eyeing patterns out, knowing what works, knowing what doesn't, just by looking at candles. Like you can just look at candles and see different things that happen in the market. No like harmonic patterns or like uh like uh double highs or triple highs or triple high or triple lows, double lows, uh but or like ABCD pattern, which is all just bullshit. Like you can make money trading that, but it's not as I would definitely say there's less growth. So like when lots of people say that there's you can make money in a trading strategy, right? That's true, but where are you going to have the most room for growth and the most right? So because like growth is really just limited by fear and greed. And if you have a lot of fear and greed, then your growth is limited. So if you don't have a lot of fear and greed, right? Because fear and greed just comes from uncertainty, right? Not knowing what's going to occur. So if you're able to know what's going to occur 100% of the time, or even 90% of the time, and having confidence in that, then your development is going to exceed somebody else who is limited by that fear that they have. So just being able to find a strategy where you're not fearful and you have no uncertainty. So yeah, but yeah, just like go in your charts and just really look at what occurs in the markets like very often, and you'll find so many different things that occur in the markets. You know, day in day out, like every single day they occur. Just start finding like different things that occur. So yeah, I really advise you to go in the charts and just back test, hindsight, everything. But yeah, go do it.